This episode is brought to you in partnership with Forex.com, a leading provider of online trading services. Remember, trading Forex and CFDs carries risk and isn't suitable for everyone. Pay the bills, you can hardly afford to buy a house on 2 wages, let alone 1 these days, right? What is going on in debts, trade wars? There's so much at the moment. We're talking about kind of a new world order, but what's going on in the markets right now?
Inflation. Trump.
Hello and welcome back to another episode of Two Blokes Trading. Today is a special one. I'm delighted to announce that Chris Tubby is officially joining us as one of the blokes. Chris has over 50 years of trading experience, and not only will he be sharing his insights here on the podcast, but inside the Two Blokes Trading app, you'll be able to chat with us directly, join our live trade rooms, access our analysis, webinars and education. And speaking of webinars, our very first free webinar is on the 16th of September, just before the big Fed meeting. So make sure to download the app and don't miss out. You've mastered all asset classes at this stage, right?
You've seen that gold just keep going higher and higher and higher. And I think, people want to put their money where they feel comfortable. Google's investing in another 100 billion, I think it is. When are they going to start to get that money back? Everyone used to go mad because of blame all the miners for Bitcoin. Look at the amount of energy you're using. Look at the amount of energy that's used to produce AI. It's not just electricity, but it's also water.
Let's get into today's episode. Geopolitics, global debt, the dollar, crypto, elections, and a new world order that's shaping markets right now. Chris, I'm delighted to welcome you back to another episode of Two Blokes Trading. I'm actually even more excited to announce that you'll be joining us as one of the blokes. I can't believe it. We've finally done it. We've been speaking about it for a while now, Chris, but I'm really delighted that you're actually going to be joining us on a full-time basis. So thanks for coming on.
You're welcome. And I'm so excited to be joining the team and becoming part of it, and obviously do what we do, which is help guys and try and guide them and just help them with their trading, bit of insight, and of course, hopefully get them where they want to go and achieve their goals in trading.
Absolutely. It also means that you'll be obviously sharing your insights on not only on the podcast, but also in our app as well. Obviously, look, the key for us, and again, like you say, is trying to help traders. But I suppose our podcast is one way of doing that. But obviously in the app, sharing your strategies, your insights, trade rooms, live webinars, and so on, it's going to add huge value to our listeners. And I can't wait to even learn from you myself.
Yeah, no, I hope so. And with 50 plus years of experience, hopefully some of that will come out and benefit and be of value to the guys that obviously watch us.
Yeah, and you'll be my new sensei too, huh?
You'd have to join the queue there. There's a few of them now. Cool.
All right, yeah. Awesome. And look, just to say as well, we'll be running our first free webinar on the 16th of September. That's just before the big Fed meeting. So if you guys want to join, download the Two Blokes Trading app, and you can actually join myself and Chris live in the markets, discussing what's happening around that Fed. We'll be looking at some charts and talking about some of the macros and sentiment around that as well, right?
Yeah, and obviously, it's a big one after the summer recess and what's going to happen there. The expectations of a rate cut, and of course, Friday, we've seen what's going on with NFP, and again, that's going to give the Fed a little bit more insight into what's going on within the economy. You look at ADP and the data is just not that great. And it's one of those areas where, I've been quite vocal for over a year now about the fact that when you're looking at this unemployment and employment data that's coming through, especially in the US, a lot of the guys that are on the sort of the lower end of the scale of salaries, I think why employment looks so strong is because they're having to manage sometimes 3 jobs to pay the bills at the moment.
Yeah, which is crazy. That's the problem with inflation. It's hurting the lower class more than anyone, right?
Yeah, and I'd love to have that data of how many people actually are holding more than one job.
Sure, 100%. Long gone is the day when you could have, the man used to go to work to pay the bills. You can hardly afford to buy a house on 2 wages, let alone 1 these days, right?
Yeah, and of course, I mean, I was very lucky. I bought my first one when I was 20, but things were different then. But I think also, as we've seen inflation rise so much since COVID, I mean, that's had a massive impact on people's disposable income, if they have it
Sure.
at all.
100% it is. And I suppose just to go back to a bit about yourself, Chris, as well, just to give the listeners a bit more understanding of what you do, what markets you're trading, and so on. Obviously, you've mastered all asset classes at this stage, right? You've kind of spent a lot of time in each individual asset classes, kind of breaking it down and getting to a point where you've actually mastered them, right?
Yeah, I mean, all you have to do is tweak your processes, really. I mean, the actual structure of the trades is not very different. But of course, volatility increases, decreases, depends where you're going in those asset classes. But it's just a matter of okay, so, I started with commodities, then I moved across to the financials. I've been a market maker, prop trader. I mean, I've been prop trading for 38 years now. So, but I've been trading the account even going back into my early commodity days, and that was one of the reasons I got offered to run coffee, really, was because of my trading abilities. But, you've got those different pace markets. And again, when you're trading financials and commodities, different sets of fundamentals, and understanding them is key to sort of, you can have the best setup. But if you don't understand what you're trading and how you should trade it, then you can still come unstuck.
Sure, but talking about I suppose your technical setup, does that differentiate much? I know obviously sentiment changes and bias changes throughout different markets, but in terms of your actual technical setups, are they quite similar across the board?
Yeah, yeah. I mean, I use three different charts. I've got two studies, stroke three studies that I use, and probably this year actually, I've added one new sort of study, which is the first one I've added for over a decade. Again, I'm still testing it at the moment just to prove, because you need to do this. You can't just assume that you can add something and that it's going to be profitable or that. You've got to test it for a period of time, and of course in all the different asset classes to see where it's going to work best.
Sure, sure, 100%. But I mean, how does it go from like trading a stock to a CFD in Forex, for instance? Or, like, is your mentality changing all the time? I mean, do you have to keep on top of so much macros all the time? Or, how much of your strategy, I guess, is sentiment, fundamental based to technical?
Well, I do a morning daily newsletter, so each morning I'm spending the first hour to 2 hours just reading reports and absorbing all of that information. And I sort of filter that down for the newsletter. So I'm only putting what's relevant to the markets. But I'm still reading and absorbing all that because that helps me with my fundamental bias. And then, the way I always put it is, it's the fundamentals that's going to drive the markets and determine the direction, the volatility and all that. But we use the technicals to help us and give us that sort of more visual display of where they've been and where they're likely heading. And of course, to help us with our timing for our entries, our exits, and also where to place our stop losses.
Yeah, absolutely. That's the last thing really is looking at charts, right? Once you have your bias, once you understand the fundamentals, then you're looking at the charts for your entries and exits at that point. But I suppose moving on to the current outlook and macros at the moment. I mean, for me, every time I look at the news, it feels like the world's on fire. I mean, what is going on? Inflation, debts, trade wars, like there's so much at the moment. I mean, like we're talking about, I'll move on next to like kind of a new world order. But what's going on in the markets right now?
Yeah, well, Trump, 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 and of course, when's that going to stop? Not for a while yet, but there's legal challenges going on about his tariffs. He's been pressuring the Fed to cut rates, and of course, why does he want those cheaper rates in the US? Is it to help households out? Is it to help the public out? Not really. Why he wants rates, you've got to remember Trump is like a bit selfish to say the least, is he wants lower rates because it's going to benefit the treasury.
Sure.
If you look at what they've been spending financing their debt, which is about $37 trillion and likely to climb up to potentially 40 by the end of this decade, then they're spending as much financing that as almost as what they do on defense.
Yeah, absolutely. And like the biggest thing with the accumulation of the debt is the interest, and now they're actually borrowing to pay interest, and they're like, I mean, that's going to crack at some stage. You can't like that is not sustainable, right?
Yeah, they've got that sort of revolving debt, where they keep borrowing from new investors to pay back old investors. I mean, you go back 30 years, sort of 95 rates then. So, they benefited when they was replacing some of that after COVID and rates were very, very low. But of course, then after the inflation started to come in, central banks had to hike rates, which they've been doing. And of course, then since they've been readjusting them back to the downside when they felt that they've got inflation under control. The question is, have they really got inflation under control? Because although they got very close to their 2% target level, they didn't really, especially in the US, they didn't really achieve that yet. And, now you're starting to see it creep back up again. And I think that's only just starting to feed into the economy. I think there's more inflation to be fed into the US economy for sure. And some of the others, because, why those tariffs are going on, if they're being implemented, which they are in some countries, obviously, that's bumping prices up. And of course, if you're looking at tariffs, Trump's rubbing his hands going, look at the extra money we're bringing in through tariffs. But who's paying the real cost? It's the consumer.
Absolutely.
And again, that's another bump on inflation.
Yeah, exactly that. And then obviously the whole idea of him wanting to kind of push in on the Fed. I mean, like we're looking at him trying to get full control of the Fed. I mean, what does that look like?
Well, obviously, Powell's up for well, it would be for a sort of a renewal from the end of May, but he's not going to get that because obviously Trump's been trying to get rid of him even earlier. He because he's frustrated about no rate cuts. But what you've got to remember there is Powell himself does not make that decision. It's the whole committee that vote on that. So it's not just him. Okay, he might be able to swing and add a little bit of influence, but it's not just him.
Is that 7 members, right?
There's 7 to the key, the main board, and then there's another 15 of regional ones that are rotated. Some of them come in and swap around. But Trump's even trying to sort of manipulate that if he can in a way where he gets full indirect control of the Fed. He can't take direct control, but all he wants basically is to place guys there that are either aligned with his thinking or perhaps he thinks that he can control them or influence them in some way to do his bidding, which is obviously what he's looking for. Now, one resigned, so he's replaced one, so he's got one on the board already. Then he's trying to get rid of Cook, and of course that's gone legal now, so she's fighting back there to hold on to her place. And then by May, June time next year, at the absolute latest, I think he's going to have 4 in place quite easily, possibly even more, which would be enough. But, okay, so they can cut rates. I think, we're going to discuss this in a couple of weeks anyway, just before the FOMC. But, there's room, and I've been saying this for months, that there's room for a rate cut in September, possibly one in December as well. But I don't see much more than that. And I think, again, that's something where the Fed's got to be really careful that if they do these cuts, they've got to warn the public that not to expect these rates to go back down to 2% or 0, because that's not going to happen. Inflation is too much. It scared them, basically, because it's something that they haven't been able to easily control.
Sure, 100%. But there's that balance, right? There's a reason why they're trying to hold rates. There's a very good reason for that. And if he was to get into control and we were seeing like a big slash of interest rates, there's going to be the opposite effect, So, I mean, honestly, it's like what happens if he does get that control and we do see interest rates start to be slashed? Like, what's the direct impact of that?
Well, I think the longer dated yields could actually hold up quite high because there'll be a lot of panic about, what's going on in America, where politics is controlling the Fed, the central banks. I mean, you've got to go back absolute decades before that was the case before. But I think personally, I can see a run on the dollar if that happens.
Just about to ask you that next. Yeah, you read my mind. I see the same thing, but I mean, look, the problem is at the moment there's no real correlations, and what you expect is not happening in the markets at the moment. So it's a matter of this. It's a fine balance for sure. But I mean, do you think as well with the this reform, the new block coming in, like will that chip away at the dollar dominance as well, or?
No, it's possible. I think there's just so much going on everywhere. That it becomes very entangled. But Trump obviously is having such a huge impact globally as well as within the US. But it's obviously dented sort of US confidence. It's it burst that bubble. I mean, the US was almost in its own bubble economically for a long time after COVID because they pumped so much stimulus into the economy. But when Trump came in, he burst that bubble. It's as simple as that. The Americans suddenly sort of woke up and looked, hey, okay, I've been doing great, but now I'm only doing okay. And look where inflation's been coming from, how much that sort of dented my earnings. Okay, so salaries have gone up, but have they kept pace with that? Okay, so I'm in the UK at the moment, but we've seen food prices go up 40% since COVID.
Yeah, which is insane. And I suppose the other side of that, then, what is the hedge against that? Like, I mean, are people using crypto as their hedge? I mean, the problem with crypto is it's like you see Bitcoin dump 10%. Like, but what is the hedge? Like, what do you feel the hedge is?
It's a good question. And if you look at gold, that's probably answers your question. You've seen that gold just keep going higher and higher and higher. And I think, people have been moving heavily into that right across the board of investors, the whole spectrum. And, I'm not saying it's going to go to the moon, but, people want to put their money where they feel comfortable. You've had stock markets making these new record highs recently. But again, when you come back to the fact that there could be some rate cuts, investors seem to be getting excited about that and buying stocks on the back of that for the companies. But you've got to ask the big question is, why are they cutting rates then? And they're cutting rates because they're concerned about the economy, unemployment, and right across the board. And if that's the case, then that's a concern, and that's going to be a concern for the company's performance coming after that as well, because consumers are likely to start to cut back.
Sure. And in terms of stocks, I mean, it's been mixed recently, right? I mean, what's your longer term goal on stocks? I mean, especially look, I mean, I've been reading a lot of analysts out there. They're saying, look, and I've seen a lot of big players come out in the market, hedge funds even pulling out of US stocks because they're saying, like, man, within 3 years, we're going to see a big bang, not just recession, but a big bang in the next 3 years. And that's even if it takes 3 years. Where do you see the stock market going from here as well with all this turmoil?
Well, I've been shifting out of some of the stocks and more putting more into fixed income just to secure those rates before they drop. And of course, if you're going to do that, especially if you're going to invest in the US, you've got to do your FX as well to make sure you're covering yourself for any change of the exchange rate, because otherwise, you could be making on your trade, but you could be losing on the FX. So you've got to make sure you hedge yourself with things like that. But for me, I love to short the market, so it's a bit of a difficult thing sometimes, but I'm not stupid and I want to preserve my money and my capital and make that grow as much as possible. So, when I'm going into something that's got such a strong trend to it, I use options.
Yeah.
So I go in and I'll happily buy put options, which gives me the right but not the obligation to go short of the stocks or the indices. And that's my way of sort of managing it from the short side. It just gives me a guaranteed stop loss rather than just trying to sort of ride the whole trend all the way through, because that can become very expensive.
Yeah. A big thanks to our sponsor, Forex.com, for supporting this show and keeping it free for all of you. One feature I think a lot of traders will love is that you can actually link your Forex.com account directly into TradingView. So instead of bouncing between platforms, you can analyze a chart, spot the setup, and place the trade right there. Another tool I really rate is their performance analytics. It doesn't just tell you your wins and your losses, it shows you patterns, like what time of day you tend to trade best, or which strategies are really working for you. That kind of feedback can make a huge difference over the long run. We're able to keep putting on these episodes every week thanks to partners like Forex.com. And if you're looking for a broker with strong tools and integrations, they're definitely worth a look. Just a reminder, trading Forex and CFDs carries a risk and is not suitable for everyone, so always trade responsibly. If you want to check them out, there's a link in the description. Yeah, absolutely. And do you think the AI boom is going to kind of level off at some stage? You've kind of already seen that in some respects. I mean,
You're starting to see that, but when you look at how much money these, Google's investing in like another 100 billion, I think it is. But when you look at how much they're investing, when are they going to start to get that money back? Are they seeing any of that come back already? And when you look at AI, everyone used to go mad because of and blame all the miners for Bitcoin. Look at the amount of energy you're using and all that. But look at the amount of energy that's used to produce AI. It's not just electricity, but it's also water as a coolant for the servers and such.
mm-hmm. Funny enough, I was actually speaking to one of the original hosts of the podcast today for quite a while today, Tom. And he mentioned how the climate is changing as well. And I wanted to kind of bring this up to you because, the effects of climate change, people have no idea and understand, right? And with the increase in the use of technology, people become further and further detached from their natural environment, right? And into this kind of tech world that we're in now at the moment. But like the consequences of this is huge, right? Again, you're talking about Bitcoin and the more power supply we need and so on. But like, not only that, like the weather is changing in a lot of the countries and people don't realize how quickly it's changing. And that then can turn into a mass exodus. We could see a huge amount of people having to leave where they live, and all of a sudden becomes more pressure on different economies. We're going to see more panic, I think climate is a huge thing as well that we also need to recognize with crypto and Bitcoin and so on. Like, what's your view on that yourself?
Yeah, because you're still constantly getting sea levels increasing year on year, temperatures increasing, especially in Europe. Again, I've been sort of mentioning for a while that I can see it's not that far away before Europe's going to have to change some of the crops that they grow just because of those temperatures. I mean, even look at France.
The other side of it, it's food.
Yeah, and France is struggling with their wine industry because the quality and the quantity of the grape. I don't know that much about it. I like drinking it, but I don't know much about growing it, so I'm not sure where that goes. But you've and of course, Trump doesn't believe in climate change at all. And again, it depends. Everyone's got their own view of what climate change is and what it means and why it's happening. Personally, for me, I just still think it's the world defrosting from the ice age. Because all we've got left basically are the polar caps, and that's where the rest of it's coming from. But if you look at sort of the globe and go back centuries, I don't know how far you'd have to go back, and how much of the world was actually covered with water. And then obviously a lot of that's been reclaimed land over the centuries, and it's just sort of reverting back where the water levels are going back up in the oceans. But you can see some of these islands just suddenly disappear over time.
Mm-hmm. Yeah, it's crazy, and it's something that I'd love to know more about, but there's so many contradicting views upon this, and no one really knows the answer to it. But I definitely think it's something that it will impact the markets as well, for sure, come down the line. But right now, we're all happy. We've all got AI. We can all chat to ChatGPT and make our lives easier, right?
But the problem with some of it is that the accuracy of forecasting the weather is quite short, really. I mean, you can get it right, quite accurate, probably up to about 6 weeks, I believe. and then it almost just drops off of a cliff. Whether that's improving with AI, I'm not really sure. But that again, is a problem in itself. And of
Mhm.
course, a lot of the weather, the patterns when they do change the extremes, is caused by La Nina. So you get El Nino and you get La Nina. They're sort of like weather forces that are out in the Pacific. And then so El Nino's around most of the time, but La Nina, when that comes, it sort of pretty much causes topsy-turvy weather.
Right, right. There you go. Learned something else today.
Back to my old commodity days. We
Yeah.
that a lot.
Yeah, yeah. And look, I want to pick your brains about this because I mentioned it at the start of the episode, but what's going on? I mean, we've now seen some of the world leaders shoulder to shoulder recently, right? In this big power display, we're seeing China, we're seeing Korea, we're seeing North Korea, we're seeing Iran, we're seeing now India as well, potentially. Like we're seeing some big players rubbing shoulders at the moment and some big statements coming out as well recently.
Yeah, it's almost becoming a us and them situation, isn't it?
And now you're seeing European spend in defense, you're seeing, all these changes. And it's like this has been triggered somewhere, somehow. This isn't just like, oh, we're just going to start spending on defense today. You know, there's something aligning at the moment, or not aligning, should I say. But this new world order is happening. It's coming. What's the next steps with this? It's like, they're a powerful combination of nations that are pulling together at the moment.
Yeah, and it's a
And
bit
what
frightening
is
as well.
it's a combination of what's going on with Trump. That's obviously a huge factor in this, but also is it a weakness in European governments and that allowing, Ukraine not to come in and step in and help Ukraine, for instance, and allow things that's happening. Like all these things are reverberating back, to this big power play. I think these guys are like, this is a time to move. This is a time to, you know, have this big power play. Would you believe that?
Yeah, I think certain countries certainly see a weakness in government for especially in Europe,
Mhm.
and uh, Europe's been very complacent over the last 10 years or so. They haven't really invested in Europe, same as Germany hasn't invested in Germany, and that's come back to bite them now. And of course, then Trump come out when he got back in as president, going, "Okay, all you guys, we're not going to pay for your defense anymore. You got to pay for it yourself." And of course, they promised to do that the last time I was in power, and they did do it. So now he's up the ante, and he's like, "You got to do it now," and that's prompted them to spend more on defense. Now, one of the problems that Europe's got when it comes to defense is that they don't produce enough weapons for
Mhm.
to match the demand that they're going to have across the board of 27 countries. So that becomes a problem. And of course, then you got to then go outside of Europe to purchase those weapons. And where you're going to go? The US. So Trump wins both ways there. He's paying less in, but a lot of the companies are going to earn from that because they're going to be supplying those weapons and those defense systems for the future.
Sure, 100%. But I mean, I suppose as people are at breaking point as well. Like not only is it everything's getting more expensive, like you say, people aren't getting paid more to cover this rise in inflation. At what point does the idea of communism shine through, or some form of a world where people can afford to live, and not have the stresses and pressures that we have? Obviously, it's cycles, right? And we're probably right at the top of that cycle, and we'll see that boom, and then that kind of claw back up again. That going to happen sooner rather than later? I mean, how long can people sustain the current path?
It's difficult. You're seeing that sort of poverty threshold increase for sure. And of course, we talk about dictators and all that, but I mean, if you look at Trump, I mean, he doesn't really sort of go to Congress and go, I want to do this, I want to do that. It's like, I'm going to do this. And he's even said it, I'm the president of the US. Oh, I want to do what I'm going to do what.
Mhm.
And of course, then that causes a lot of friction. And then, where does the judicial area come into that, are they answering to Trump, or is Trump answering to them?
Sure, sure. Yeah, it really is a kind of crazy landscape that we're facing at the moment. That's, I guess, it's a kind of sit on your hands and wait and see, I guess, approach. But I mean, I suppose to sum it up, where do you feel that the biggest risks and opportunities lay within the next 12 months?
12 months is a long time in these markets at the moment, so I'm not sure I'd want to go that far. But I think, I think one key time, if you're looking over the next 12 months, is going to be June 2026, because that's when Powell's been replaced. That's when Trump's likely, if not before, to have got control of the Fed indirectly and influencing those decisions. That is when there could be some real big swings in these markets. Now, before that, I do believe that these tariffs, if they remain, will impact GDPs. The GDP almost across the board's got to go lower. And of course, because Trump's brought out all these tariffs, there was sort of probably at least four ways that could have gone. So the first one was everyone negotiates and they accept that they're going to have to pay a bit more or give a bit more to Trump. The other one is to reciprocate and whack the US with loads of tariffs, which some have done. But there's the third one, which plays into China's hands and some of the other countries, which is to try and avoid actually doing business with America. And then there is a fourth one as well, where it does entice companies, which again could be a Trump ploy, does entice companies to open up and manufacture inside America, because then they don't have those tariffs. They're selling domestically then. And of course, they could benefit from cheaper taxation as well, because that's been one of Trump's policies, is to reduce taxation, not for the working class, but for everybody else, by the looks of it.
Is it sustainable to run a country without the level of imports and exports that they have? I mean, especially with the level of debt they've got and
It's going to be difficult. I mean, the one thing is, if the dollar does have a bit of a run on it, I mean, you've already seen it come off a lot this year, is the fact that it does make the US exports more attractive because you're weaker dollar. So, that could come into play. And again, you get a weaker dollar, that does give commodities generally an extra boost if they're already going up. Puts a little bit of a fire underneath them because it takes less in local currency to buy those commodities. And, it's not just about gold, but you've seen silver have a massive bull run as well.
Yeah, absolutely. And then obviously coming into the winter, I mean, where do you see oil running towards?
I've been bearish for oil all year. I mean, my first conversation on January the 2nd with someone that I mentor, when he asked me, because he's an oil trader, is like, where do you see oil this year? And I was like, I can see TI going down to $50. It hasn't made it yet. I mean, the low's about 55, and of course at the moment it's around about 64, 65. But unless there's anything major geopolitically, I just don't think the demand is going to increase. So, I think the only proviso there is the fact that Trump's sort of penalizing India for buying its oil from Russia by more tariffs. So, if that's something that comes into play. But, a lot of this and a lot of the bullying tactics, if you like, do seem to over time sort of create these little cliques, these little blocks of countries that are more aligned and less interested in dealing with America. And I know we're talking about America a lot, but it's the old classic saying, isn't it? When America sneezes, the world catches a cold. Whether that's changing, I don't really know now. But, there's still so much to happen this year. I mean, it's great for the markets. There's going to be so many great opportunities. And, okay, so for me, if I'm, I've been selling dollars because of my expectations of what I'm going to earn for the rest of the year. So if I expect the dollar to weaken, I've already hedged myself. But, if you're trading currencies, then, if you've got one currency that you think is going to strengthen or weaken, then you've got to look at which other currency you think is going to go in the opposite way to give yourself a bit of a hedge. I see the pound overvalued at the moment. I mean,
Yeah,
look at it.
I agree.
UK government, look at yields.
Mhm.
There's a lot going on in the UK, but not that much of it is good. And so for me, okay, so I can see a dollar weakening, I can see the pound weakening. So then I've got to look at something that I think, that I can offset. I had one of the guys I was mentoring, I can't remember if it was this week or the end of last week. He's like, "Oh, Chris," he said, "I want to buy the yen. What should I do against it?" So I'm like, "Well, this is your choices. I wouldn't do the dollar, but I would probably do the pound at the moment because I just think it's overvalued." And he did that, and he got his profit same day, so he was quite happy with
Yeah. But that's the key to trading, right? There's so many variables. It's like sometimes it's just not about a strategy or your bias. It's about understanding these variables and bringing them into play in different ways. And that's how you really get a bit of a niche in the market to have your, get that strategy and start to get that better consistency. You're looking at things slightly different, just like you said there. It's just trying to help traders see things slightly different and find these ideas and these opportunities in a market that exist that potentially you wouldn't have even thought about because you're looking at these markets for the wrong reasons sometimes.
Yeah, sometimes you got to look outside, looking in, rather than sort of just being so deep into it. It's. I mean, so I used to be in cocoa, but the reason I got offered a job in coffee was just because I went to cover the guy that was in there for a couple of weeks, and he had a 2-lot position, so I just traded that in and out for the 2 weeks, and the coffee director offered me a job, and he offered me enough to make me want to do it as well. But then, after a few years, coffee went fairly quiet. The dollar looks, I want to get long the dollar. So it's like, so I did that for myself. I just switched all my currency into dollars personally. But then I thought, how can I do that for the company as well? And this is where you just got to think a little bit wider sometimes. So I can do arbitrage. So I was buying New York coffee, selling London coffee, because that made me naturally long dollars.
Yeah.
And that works really well. So
And the beauty of it now is people can get access to all your knowledge, all your skill set and expertise within the app as well, which is, I also want to mention again, make sure to download the app at twoblokestrading.com if you want to ask Chris questions or myself questions. If you want to get our analysis, we're going to be doing live trade rooms, webinars, and so on. So, there's loads of value in the app there now, guys. So make sure to jump in and talk to us. And obviously, before we finish off as well, Chris, obviously, on the 16th, we're going to be running that free live webinar as well. There's loads of free content in the app anyway, guys, at the moment. So make sure to jump in and join us in that. Again, Chris, thank you so much for coming on. I can't wait for our next episode. Again, we'll be interviewing other people, but we'll also be talking about the macros and keeping an eye on the markets. But like I said, for in-depth analysis, guys, jump into the app. Thanks again for joining us, Chris.
thank you. Thanks for inviting me.
It's great to have you. Great to have you on, but really is.
Cheers.
This episode is brought to you in partnership with Forex.com, a leading provider of online trading services. Remember, trading Forex and CFDs carries risk and isn't suitable for everyone.